Hi, this is Chuck Carnevale, the Chuck in the Market's Up, Chuck. And, today's blog was titled eBay Auction Empathy. And, it was, the empathy came from the auction stock market having empathy for eBay's auction results because they just reported their second quarter yesterday. So we're going to, using our fundamental research analyzer tool, we're going to take a look at eBay from the fundamentals. And, there's several screenshots I want to show you here so you can get a kind of a full picture of eBay. First of all, when you look at eBay from, at the perspective of, the last 10 or 11 years, you can see the growth rate has been extraordinary. eBay has compounded earnings at over 57% a year, and the company has no debt on its balance sheet. When you kind of bring that down a little bit and look at it for just the last 4 or 5 years, you would clearly see that the growth rate has begun to slow rather precipitously. It's averaging about 16.8%, since 2006, and this is really about a 3.5-year period here. So if I run that out to a 6-year chart where I get a 5.5-year period, you will see that the 26% growth includes some really incredible years, as you can see down here at the bottom of the chart. And there are times where they had like a great 34% growth rate, then they had a flat growth rate here, and then a 58% growth rate, and so on. The company is a $24 billion market cap now. So it's it's getting quite big. But there's a couple of other screenshots that I want to basically look at here from the standpoint of understanding eBay that I think are very important. First of all, I want to look at it from a longer-term perspective and look at it from the standpoint of the amount of free cash flow it generates. So this is the entire chart on eBay going back from October of 1998, and the orange picture here you see is free cash flow, and you can see that eBay actually has consistently generated free cash flow in excess of earnings. When you look at it from a standpoint of operating earnings or add that equation, you find that operating earnings were even higher than free cash flow. So the company is a very, very high cash flow generator, and by the way, I might point out they generated a lot of cash and free cash flow this last quarter as well. So their cash flow generation continues. But, when you're looking at eBay, as of the close on the 21st, which I'm a day behind here, you had a $19 stock price. As I mentioned in the blog, it closed at around 19.5 on the 22nd. That'll be updated here soon in our charts. But the point is, today, right now, currently, it might be fun to go ahead and get a quote on eBay and take a look at how it's actually trading right now, in the stock market. So using Microsoft Investor here, as of real time, which is 9:58 a.m., just a few moments ago, it was up $1.72 to $21.17, or plus 8.84%. Now, the main point of this whole blog is that's an incredible number when you consider the fact it's a $24 billion company. So if I look at this chart here and I go to 21 dollars, we're looking at the stock price moving about right here. Now, this is a forecast chart that I drew, which is based on the 5-year average of 15 to 20%. Consensus right now has growth rate at around 10 or 11%. But the reality of it is, I think that's somewhat discounted. If you look at it from a more of a historical point of view, in some of the growth initiatives that eBay has, it could very well be growing at 16% a year. But the real truth is ultimately going to be in this picture here. If it turns out to only be the 10% number that analysts at the consensus is currently forecasting on eBay, then you could argue that the stock is fully valued right now because it certainly would be worth 15 times earnings, even with a 10% growth rate. We've talked about not that in other blogs. But here's the final point that I want to make and end the discussion with eBay. This is a terrific company. They have no debt on their balance sheet. They generate a lot of cash flow, and the stock has been, in our view, at least in my view, significantly undervalued, and you can see it actually got down to under $10 a share earlier this year, and now it's it's more than doubled from that low value. How high it belongs, I certainly don't believe it belongs up here at a 50 multiple, obviously, but a 15 or 20 multiple might make some sense on eBay going forward. But here's the main point I'm trying to make. There's no possible way that this stock has changed in value, in intrinsic value, by 15% over the last couple of days, like the stock market has reacted to it. And the key point is, you always want to evaluate your business. And if you think your stock is worth 20 and the market's pricing it at 15, then for goodness sake, don't sell. Either look for a way to buy more or wait until that $20 value manifests, because in the long run, earnings determine market price, as I pointed out many, many times, and ultimately you're going to get the true worth value of your company. So the real key is to not let the market be dictating how you act, and understand your businesses, look at them, and recognize that the market can be very irrational, but don't let it scare you or don't let it make you greedy. Always try to think your way through and do your homework. It's Chuck Carnevale. I hope you enjoyed today's look at eBay, and I'll be talking to you again tomorrow.